Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for June 1st, 2010. The first chart this week is of the Dow 30 ETF. DIA is the symbol. We had a bounce back starting last week, and that bounce back lasted for about 3 days, and then today some late day selling took the market below that little very short-term upward trend line. I'll show that in more detail in a minute on some of the other charts, but essentially we can see that the sellers are in control. We have a series of falling tops that have been building here. The longer term upward trend line is still okay, although we're really flirting with it. I would say this market currently is on the negative side of neutral. The Canadian dollar started today strong and then faded through the day. That's not a positive sign. Anytime a market is able to move to highs and then end up being down for the day, as it did for the Canadian dollar today, that's often a turning point, and we could see the Canadian dollar pull back in the very short term. Gold made pretty good gains today, have been going up over the last week or so. We still need to get through this level of resistance, and of course we have some way to go toward doing that. My expectation is gold probably goes higher and then gets stuck there, and will probably take the next little while to consolidate sideways, but the longer term outlook for gold is positive. Anytime a market sells off dramatically, you eventually get a bounce, and we had that bounce in oil over the last 3 or 4 days. The bounce is probably over. The question now becomes whether we test the lows, which I'm drawing here now, or if we instead pull back a little bit here, form a rising bottom. Well, that is ultimately the beginnings of a turnaround in trend that can eventually lead to a greater upward move. What I would look for with oil, and for many of the markets that we've looked at, is whether on the pullback that is likely to happen in the near term, whether that pullback makes new lows or instead makes a rising bottom. If we form a rising bottom, then you have a sign from the buyers that they are not willing to let prices go any lower, and it is a sign of optimism. NASDAQ 100 did what all the other markets did today, started strong, faded into the close, so we broke a very short-term upward trend line, and of course the longer-term downward trend line that's been building for about the last month remains intact. However, we hopefully can hold this low here and build a base that in the long term is consistent with these rising bottoms, which is in long-term sense a sign of optimism. So the market's going through a tough time right now, really trying to decide where it wants to go. I think we could see, the lows of a few weeks, or pardon me, last week hold up, but it's difficult to say at this point. We'll have to keep an eye on it. The chart of the S&P 500 is very similar to the chart of the Dow and the NASDAQ. We have that downward trend that has been building over the last little while. We had our bounce back that lasted about 4 days, and today, right here, we broke that little upward trend that's been in place for the last 3 or 4 days. And that is a sign that we'll probably come back, possibly retesting these lows. Could also move to new lows. That's something we want to be watchful of. I'm suggesting some caution in the short term because of the market action today, indicating that we could see more of a pullback. The Canadian market has that same sort of short-term breakdown where we had our bounce. Today we broke the bounce. Cycle of falling tops remains intact. The Canadian market is in better condition longer term because, when you look at that chart, you don't really see the break of the long-term upward trend. We're, really in kind of a sideways consolidation period here. But if we were to come back and break that cycle of rising bottoms, well, then there'd be cause for concern. I think short term I'm a little bit worried, but don't get too overly concerned about Canadian stocks, as it really is one of the better looking markets in the world right now. And finally, the US dollar, which has really been the culprit for much of the weakness in the global stock markets, with the strength in the US dollar because of political concerns, particularly in Europe. It makes US stocks, North American stocks, more expensive, and that is why fewer people want to buy them. We have a nice upward trend here. The trend has really run away from its longer term upward trend line, and so the US dollar is due for a pullback. It just hasn't really given us a sign that one is likely to occur. So look for this market to probably trend sideways for the next little while. If we were to break out here, that probably means that the stock markets are moving to new lows, but more than likely I think we'll see this market trend sideways or even fade back to that longer term upward trend line. So to generalize the comments for this week's market analysis, I would say that stocks are likely to pull back in the next few days, and really what is critical is whether we retest those lows, move to new lows, or whether we form a rising bottom. If we can form a rising bottom, then we may have a little summer rally. Otherwise, I would be somewhat concerned if we break down through to new lows. That means more selling pressure is ahead. Well, that has been the Stockscores market analysis for June 1st, 2010. For more information on the tools and services offered by Stockscores, I encourage you to visit us at www.stockscores.com. Have a great week in the market and trade well.